If you're thinking of renovating your home, consolidating debt, or investing in a new business, a home equity loan could be an excellent option for you. In this video, we'll take a closer look at home equity loans, including taking a deep dive through some of their pros and their cons. First, let's define home equity. It refers to the outright value of a property you own, calculated by taking the current market value of the property and then subtracting any debt secured against the property, such as your outstanding mortgage balance. For example, if you own a house worth £160,000 and have an outstanding mortgage balance of £120,000, you have 25% equity, which is the equivalent to £40,000. The amount of home equity you have can be impacted by the current market value of the property and the amount of debt secured against it. Most homeowners' property equity increases gradually over time through an increase in the property's value and by paying off their mortgage balance. So how can you use your home equity? Well, your home equity is an asset that can be used to borrow money from banks and online lenders. You may be able to borrow more money using a home equity loan compared to other borrowing methods. A home equity loan is a type of secured loan where your home is used as collateral within the credit agreement. By listing your home as security in the home equity loan agreement, you can usually receive more favourable borrowing terms, such as increased borrowing or a lower interest rate due to less lender risk. However, remember that borrowing against your home equity puts your home at risk. If you fail to repay the loan as agreed, the lender can force the sale of your home to recover the money owed. A home equity loan provides the homeowner with a lump sum loan, which is charged with interest. The loan is deposited in the homeowner's bank account to be used as they wish. The money is then repaid with interest through a monthly payment for a fixed duration until all the loan and interest has been paid. So how much can you borrow on a home equity loan? You can usually borrow more money with a home equity loan than with an unsecured loan. The amount of equity you have in your property will influence your borrowing power. Most lenders will want you to keep at least 20% equity in your home at all times, so you won't be able to release all of the available equity. It's best to consult some home equity loan calculators to get a better idea of how much you could borrow. But be aware that the information provided may not reflect the terms of the loan you're offered. Home equity loan interest rates are usually set at a fixed rate, meaning the interest rate you pay will stay the same throughout the repayment period. On average, these rates can be as low as 3% up to about 8%. The lowest home equity loan rates are comparable to interest rates applied to residential mortgages. However, mortgage rates can sometimes be a little bit lower. It's also worth noting that a mortgage is the first line of credit secured against a property, also known as the senior line of credit. Any additional borrowing secured by the property is known as the second line or junior line of credit. This is significant because the first line of credit has first access to any money raised by the property sale proceeds should the property need to be forcibly sold to repay debt. If a homeowner is forced to sell their home and has negative equity, it could be that the mortgage lender takes most of the sale proceeds, leaving the home equity loan lender with not enough money to collect and clear its own debt with the homeowner. Overall, home equity loans can be a useful tool for homeowners looking to access their home equity for large expenses such as home renovations or debt consolidation. However, it's important to weigh the pros and the cons before deciding if a home equity loan is the right option for you. If you're interested in finding a loan for your circumstances, simply click the button below and fill out the short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow, and it will give you access to quotes from around the UK tailored to your circumstances. It's totally free to do and of course won't affect your credit score. Click the button below and fill out the short form to try it out.